So now we can move on to the retail third-party seller services. So in this case, we want to calculate the implied enterprise value based on the third-party seller services. So in this case, we will reference to Comstock again, the current trading multiples for the third party. So we reference the low and the median. Reference the median under the EV to revenue, and also reference the high under the EV to revenue to determine the implied enterprise value. So in this case, it's going to be equal to, we take the revenue generated by the third-party seller services for Amazon, we reference the cell with F1s, we multiply that by the low, medium, and high for the comparable multiple range. You can fill this to the end for the median and the high. So we can do the same thing for the advertising. So in this case, we will reference to our financial statements for the revenue generated by the advertising business segment in the year 2021 for the forecast period, approximately $35 million. Reference that there. We can also reference the comparable multiple range from our Comstock. So we go to the comparable company analysis tab and we reference the advertising year, the low, reference the median, advertising, and also reference the high, .3 times for the high. So now we can take the implied enterprise value based on the forecasted revenue for the year fiscal year 2021 and multiply that by the comparable multiple range. So we take the comparable multiple range as a function of the revenue generated. We reference that revenue with F1s, and then we multiply that by the comparable trading multiple multiply that by the current trading multiple. We can fill this to the end for the median and the high. So we can bring the revenue generated by Amazon's web services, that is cloud computing business segment. So the revenue generated in the fiscal year 2021 for the forecast period, you can go again to the financial statements tab and we grab the revenue generated by Amazon for cloud computing, $63 million. We can sum that, we can take the current trading multiples from the Comstock, you can go to the Comstock, grab the current trading multiples for the low, we grab for the median, we can also grab for the high, .7 times for the high. So we can now take the implied enterprise value. It's going to be a function of the current trading multiples and the revenue generated for the forecast period. So we take that forecast period 2021, reference the cell with F1s, multiply that by our comparable multiple range. We can fill this to the end for the median and for the high. So lastly, we do for the subscription business segment. So we go to the financial statements here, and we grab the revenue generated by Amazon subscription services in the fiscal year 2021 for the forecasted period. We grab that revenue, and then we can now determine the implied enterprise value based on that revenue, and then we could grab the current trading multiples like we did with the other business segment. So we could grab the current trading multiples, grab the low, the EV to revenue, grab the median, EV to revenue, and also grab the high enterprise value to revenue in order to calculate the implied enterprise value. So we can just copy this last and paste here as formulas. Just making sure that it is always referencing to the subscription revenue generated by the subscription services. So go back here, reference the cell with F4 3 times, fill that formula right, you can copy that